Good morning, everybody. Happy Friday. Some wild movements going on here in this bond market. I saw yesterday they had that bond auction that I read didn't go so well. And rates went up. Now they come way back down again. All right. A second here. Okay. You can see that big bar from yesterday. That's the 10-year yield, now way back down. And markets were down. I would assume that's helping to bring them back up again. But looking at what happened yesterday, we knew that these prices were in the area where the sellers were going to reemerge. I mean, whether it stopped here, closed the gap, got up to the 50. The S&Ps have been showing some relative weakness. Tech has been leading. And we want to see where today ends, whether it's going to be a red day and what the weekly chart's going to look like. Where's Friday? We want to see that weekly chart. So far, it's been stabilizing down here for a few weeks now, third week in a row. Lower high, lower low. Major support is way down here. So even if it was to break lower, I don't think there's any possibility it's coming way down here. Something terrible happens, which in this crazy world, you never know. But, minor resistance, on the weekly, see the gap here, yesterday's turn day. Prices are coming off of the lows. Look at where they're at here. They're in the middle of yesterday's range. It doesn't mean they're going to stop because you can see the way they came down. Like yesterday was like, interest rates were moving up. The dollar was moving up. Markets were holding up. The small caps were moving down. The regionals were moving down. It's like the markets are holding up here. It was kind of impressive. Like, how are they ignoring all of this? I guess that bond auction went off and then boom, everything fell apart. So now we've got this void up above yesterday's bar, of course. And so where will it stop? Well, we apply the foundation information. Let's just see here. Let me change the color of that. So when it appears on the other charts, I just want to see the location. Well, I can see the price, of course. Okay. It's right where prices are right now. Prices just pushed above it. So look, that minor resistance, it's subjective as a reference point, but everybody looks over there beyond what's directly to the left. The idea of what was support becoming resistance, so on and so forth. And the reason I say it's subjective is, years ago, looking at that concept and saying, oh, that's where prices are going to stop. And I would see prices slice through it like it wasn't there. Yeah, probably, Alex. Probably some fib line there or trader pivot line or who the hell knows what always lines up with that. But, after viewing how many times prices would slice through it like it wasn't there, I was like, what is it? Here's this concept everybody looks at, but it doesn't hold true. And this is where I came up with this, call it another concept or whatever, a thought process is that once prices have traded above and below, it neutralizes that as a reference point. So what is really relevant is what's directly to the left. And what's directly to the left here is an unfilled gap. Moving averages are subjective, but as we're looking at, yesterday and the way prices came down and the daily chart and all that, there really isn't a lot to stop prices from going up here, except for this unfilled gap. And it's working as such right now. But as far as this minor resistance, looking at the intraday chart, you can see prices are starting to push up through it. Daily charts in the middle, in the middle of yesterday's range. So the question is, of course, every day when we speak here pre-market is where's the market going to end the day? So as it comes, can it go all the way back up? And can it close up here? Which would then we'd have what we call a red bar ignored. And at that point, we got to be thinking continuation pattern higher, at least through the 50 MA. But we got a whole day to see what's going to happen here, whether we do get a green bar or whether, it gets a little bit higher and rolls back over again. And I think, keeping an eye on the 10-year to see, does this thing, see where this is at. If this starts rallying back up, the inverse relationship, equities could roll back over again. So, it's going to be one of those days, we've had a lot of them where, you just got to, intraday, you always got to be on top of what's going on because things change. And that's what makes it more difficult is that things can change on a dime like they did yesterday. And if you don't have a way of objectively monitoring what's happening, and in this case, okay, what are interest rates doing? What's the, currencies doing? Market internals and so on, you get stuck in the past and you can get run over. So looks like it's going to be a little tricky again as things start off, but we'll see how it plays out. But now as prices are moving up, again, we went over where Spider is, and I think these yields, not yields, but these strikes on SPX, they're moving. So from what I'm looking at when, before I start talking and as we are talking, prices are, up here, right? There's that minor resistance area on SPX that we looked at on SPY. That's where things are. So there's adjustments. Before this was at 44.10. And so, 44.10, now it's $1 by $1.05. Yeah. So you always want to, so in this case, we definitely want to be above 4,400, even though things are moving up. It's got to get through this topping tail bar. It's got to get into the unfilled gap. So 44.15 is 70 by 80 right now. I think that's fine. So always look at this as what's the possibility of getting that far. And these arrows here are the 5-day average range, which right now is at around 60 points. And it's on the other side of it. And on the downside, that will have come up as well. It's now 43.05. Prices are in the middle. And like yesterday, one of our conversation yesterday was where prices were there was like, I don't think based on where things are right now and the distance to the highs and low, it's not going to get to either one. And it just missed the bottom yesterday. So this area here, yesterday was 43.25, right? So you can see yesterday's low there, 27. This area here, for whatever reason, and I'm not saying it's that pivot, but whether it's high open interest at some strike or whatever, that area came into play and prices bounced off of that pretty well. You can see the tail there. Qs were down on the day. They were lagging, not day, but pre-market. And as things improved, they came off of the lows. You can see, just looking, prior pivot low there. Buyers came up and now it's up at the prior pivot highs. So it's going to stall. You see all that little congestion there. Now the depth of this retracement. So this is a concept that, well, we don't go over it in every MT live, but in some of them when we talk about certain candlestick patterns and understanding them in multiple time frames. But this is something that I covered in the event, if you were there, that 365 event a couple of days ago. When we talk about retracements, you can see this big rally. And so on a short term, it's a little extended, right, on a 5-minute time frame, and it's up into resistance. So we expect it's going to stall. However, the depth of the retracement is bullish. I mean, the way it came down and came back up again. And the idea behind what I spoke about then, or an empty live, is, it went all the way down, it went all the way up 100%. So if we compress this information into a smaller time frame, it starts to become what we recognize as a bullish 180 or a bottoming tail bar. And so while where it's going to stall here, and another reason why is I look at this and I think it's going to become it's going to be difficult at the open as to what to do, is this now has to pull back a little bit where buyers are going to want to step up. I think it needs to go sideways or form a pivot. I mean, some kind of continuation pattern. So even though things are positive here, the open is not something, looking at this chart, okay, let's jump right in on this positive move as it's going up. That would be a mistake. Yeah, they up. Gold. Wow. So what does that mean to us? Gold and silver are up, soaring, and oil is up too. So it's kind of crazy, with interest rates flipping back down. I mean, no move in the dollar. So is that a fear of what's going to possibly happen in the Middle East? What might happen here? I mean, look, inflation, yesterday's numbers weren't what was hoped for, but I mean, is it going to move gold? And everybody think, oh, now inflation is here. I don't know. This is more, I would think, possibly a fear of what might happen, today or over the weekend, but, we'll see. And there's the flip up in silver, which was kind of a sell setup, but it wasn't, not kind of, it was, but it wasn't at the resistance yet. So they tend to be tricky. Would I recommend a put spread or call spread on SPX? I think you could do either one because it's in the middle of the range. That's what I was just saying, Azar. So as prices move up, and they just cleared the quotes on my other screen here. So we always want to get on the other side of what we believe to be what could be an extreme move. Now, just based on where the Qs are here, I think they're going to stall. I can go back and look at it, but you can see they're stalling. One red bar isn't much of anything, and you can see there's still 3 minutes and 40 seconds to go in this bar, but it moved up a lot. It's at resistance and it's stalling. So obviously not a place to get long. So that the call side being that far away would be fine to do. All right, it's already getting late and talking too much here, but you get the gist of things here. You got to watch interest rates today. Things are kind of wild. Gold going up. This came down hard, but this is up a lot here today. So look, gold going up as it is, oil going up, maybe, who knows, they're going to blow up some oil field in Iran. You know what's going on in the world. I don't have to repeat it. Who knows who's going to do what? Bitcoin is not doing anything here. Markets are jiggling around. IWM, that cracked pretty good, real good yesterday, but it's at the bottom of the range here. So I think traders, institutions, call it the markets, are going to have to see how things play out here today and into next week. And, we'll see what transpires and take it from there. All yours, Dan.
Morning. I agree. I think there's more weekend risk here. It's pretty obvious. Israel's getting everything ready for a ground war. The news is showing protests in the Middle East, in the West Bank, and Yemen, etc. So, and what did J.P. Morgan Diamond come out and say today? Along with their earnings, that I'm paraphrasing, but Diamond said we're like in one of the most difficult, challenging environments with everything going on in the world right now than we've had in a really long time. And he's a smart man, obviously. Today's Friday, 0 DTE. Hopefully we can find some 0 DTE trades. A couple of earnings here. There's a few stocks getting whacked. And then look at T2. That's a big gap. $17 down to 10. Ouch. SGH. That's whacked. Look how big this is on the weekly. Man, that's an ugly gap. Here's a Saba. I don't think this one's earnings, but it's a bio, so you got that risk all the time. Look at that. It used to be $140. That's the risk with bios. BDC. I don't know what's up with this. But wow, man, there's some big gaps here today. This one I might put in the excessive gap just to see what it does. All right, let me do that right now.
Look at SGH. That's a semiconductor. That's getting killed.
Well, that's what I just started with. Yeah, that's right. And look at T2. UNH. We were going to put this in our advisory letter, but it had earnings. But this is a great example of, we don't shy away from them, because you could do, this is a good example of a pre-earnings rally. Now gapping up here a little bit, but it's been strong all time frames. JP Morgan up a little bit, big trading range, nothing to do. Black downtrend. PGR. Look at this I said yesterday, but for earnings, this would be a beautiful breakout trade. Got two little red bars ignored. You got bullish consolidation, 20 above 50. But now the gap's too big. Citigroup, 42 and change. This would be a great 0 DTE put spread if there's any juice. Wells Fargo. Alex and I sold puts on this. And Alex, I'm just going to let mine expire at full profit. I don't even want to pay a penny. I sold the 37s. So, good little trade there. And what I'll do when I go to the gym, I'll put a contingent order in that if it gets to 38.50, then close it at a penny. And that's called a contingent order. PNC says actually not bad. If it can close above yesterday's high, it in the market and the sector gets some juice, that could be a bottoming pattern. All right, just leftover stuff and new stuff. SWKS is a put spread over the highs. WDC, I see gapping up here. So that's a bullish gap into yesterday's red bar. So let's see if that can hold the gains. 30-minute high. That's an idea. Schwab, just big reputable broker firm. Look how, remember, we were trading it here. We had some beautiful trades. It's a bearish retracement, but it's in an area. I'll start watching it. Just looking at different things. Look at PayPal here. I set an alarm 56:30. Daily, weekly, monthly look horrible. CMTL, big old gap up, but nothing to do there. Dollar General, I posted as a put spread. Now this is what we call a pro gap. In a nasty downtrend. Notice how it's getting closer to the 20 MA. So that by definition is saying that selling is easing. And now it's a decisive gap breakout over 2 weeks of consolidation with a climb weekly, monthly. That is a pro gap. So I have it here in the bottom right. Keep an eye on it. Start off with a put spread. Boeing has more problems with their 737 MAX. 186. So let's see what it does around these prior lows. Because this would have been because of this deep move up, this would have been a total candidate for a double bottom. But it's not a double bottom until it is. So let's just watch and see what it does. Microsoft got the approval for their Activision purchase overseas. It's doing nothing. The fact that it shrugged off the gap down yesterday, the tax man said they owe 28 billion, so that's still relative strength. BLY, that is on Sam's short list. Plab, bottoming pattern, put spread candidate. Lending Club. I forget what the news was, but that's nasty. Daily, weekly, monthly. We already looked at that. Netflix got a downgrade. That's had two upside shakeouts. So that thing still looks lower. It's been one of the weaker fangs recently. USO, we know. This is kind of a sloppy W bottom here with this gap up, but 30-minute high, that's bullish. Echo Hotel, I don't know what the news is, but that's a monster gap, 25 bucks. Guess the gap's too big. I'm not going to even watch it because it's going to take too long to set up for anything that's going to interest me. What else? Let's go up this way now. AMBA, potential bottoming pattern. Southeast. Alex mentioned yesterday, I sold some 42 puts on them for next week. It had a gap down. The fact that it's negating the gap down is bullish. I have an alarm, I think already, 45.60. But potential directional trade once we get a better bias on the market. Greg, look at LRCX. I was in a meeting yesterday. I didn't have internet, but I could see that LRCX was up $8 yesterday. I knew, that's a beautiful double bottom retest. So that's still showing nice relative strength. KMB, it's a climb on the weekly. There's no turn yet on the daily. CNX closing breakout. That looks higher. Akamai over yesterday's high. I like it as a continuation. Burke, recent IPO that is not off to a good start. That's just getting creamed. Block, AI, these are just, I'm always watching these. Look at this. This is a Vietnamese EV company. And we were laughing in the green room that up here, the market cap was like $180 billion, and they don't make money. And this is when I say fundamentals in the long run do govern. Even in the internet days where the media was pumping the investors and traders with junk reasoning of, oh, if you have a PE, that means you make money, and that means was negative if you made money during the internet days, because they wanted you to lose money to so-called invest in the future, but reality kicks in. We back in the 90s, we created what's called the internet graveyard, where we just had images of all the symbols of all the companies that went bankrupt. And this one looks like it might be headed for that image sheet. Dollar Tree, another bottoming pattern I've been watching for a few days. Let me set an alarm at 109. BTCM, one of these little Bitcoin things. It's a bottoming pattern. Today's Friday. If it can take out Wednesday's high, then it's light volume though, but it might move. I've been watching this thing ever since this early August. I've been watching this. This poor thing just is getting creamed. ARM recent IPO doing nothing. Burl, another bottoming pattern, just can't make the turn. Look at this, another just devastation. That tail is real. $200. Man, man. Kaibo, another recent IPO, just doing nothing. Pod, duplicate, coin. Bitcoin stocks, Mr. Mara, Riot. That's nothing. That's the weakest right now. All right, this Dollar General, we need a pullback, but this looks great. All right, this BD, man, what's up with BDC? I don't even know what sector this is. Technology, Belden, earnings are 11.2, so it's not that. All right, WDC, I'm going to announce that an alarm 4660. Now that same sector is our STX, which we finally sold into strength yesterday. Look, we got a beautiful short-term pop in STX. We just took our money with the weak market. Chewy dog. And you look, see, this is the problem. When we trade bottoming patterns, we're always looking for what we call the something reversal. And we really never got one here. And that just turned out to be a consolidation and a downtrend. PayPal alarm. Look, this will be an ideal. Yeah, Paul, I just had to guess. So, we're obviously not going to do anything with it right now. All right, WDC alarm just went off to the upside, PayPal to the downside.